All right, I have literally had dozens of people ask me what the heck I'm talking about when I tell people that we're recycling capital in our fundraising efforts for our resorts. And I'm going to explain exactly what that means and how this is a revolutionary technique for investors in real estate. I'm going to tell you all about it right after this.
Hey, my name's Ken, and I'm a real estate investor. I want to welcome you to the No Money Real Estate Podcast. On this show, I interview elite level real estate investors from all over North America. And I'm going to help you to see one thing that all successful real estate investors have in common. They built their portfolios without using a dime of their own money. I've got a portfolio of $300 million in real estate. That includes resorts, apartment buildings, commercial buildings, and I built the entire portfolio without using a dime of my own money. Real estate is a business that anybody can get into, but the strategies that those tight real estate investors use to build massive portfolios have been kept secret for decades. Now, because of this show, I'm going to reveal them to you. So let's get started.
Hey, listen, this is a very special episode because we tripped on something that I've been trying to gatekeep it, to be very honest with you, for the last couple of years. I didn't want to talk openly about it publicly because it is so different than how everybody else is raising capital, what we're actually doing, that we coined a phrase called recycling capital. And it's creating a lot of skepticism. We've got a lot of our competitors who think that we're breaking rules when we do this. But I want to walk you through exactly how this works and let you know that if you're interested in investing with us, you get to benefit from this. So first of all, my name's Ken Dunn, and I am the founder of the Dunn Investments Fund. The Dunn Investments Fund is the investment arm of our real estate development company. We are building a boutique portfolio of cottage resorts right across Canada. So these are luxury resorts, just like you're used to staying to in the Caribbean and abroad, but right here in Canada. Beautiful accommodations on the most beautiful beaches in our country and everything you would expect at a spa luxury resort. They're unbelievable. But we tripped on a technique when we first started doing these projects, when we were raising capital for the projects. And now we call this recycling capital, but I want to explain this to you so you understand it. So if you like investing in real estate, if you're trying to make more money with your registered funds, your RSPs, your RESPs, your TFSAs, your LIRAs, or cash, if you like to invest in real estate, there are some amazing companies out there that use investors' money to build their portfolios. And I'm not going to name any of these companies, but they're unbelievable. This has been happening in our country for dozens of years. But we do it differently. We've got a couple things that we do that are revolutionary, that nobody else is doing. And the main thing is called recycling capital. Let me explain what I mean by this. When you invest in our resort projects, first of all, you have to be an eligible investor, which means you have to make at least $80,000 a year in income, or you have $400,000 in assets, or between you and your spouse, you make $300,000 in income. If you fit any of those criteria, because pay attention, because you can participate in this. The minimum investment to invest in any of our projects is $20,000. But here's what makes it special. When you invest in our projects, you're going to be buying stock in the company. You're actually going to become an owner. And you can do this with your registered funds. That means your registered fund account is going to be an owner of a luxury spa or resort. But what's this recycling thing all about? What does that actually mean? I'll tell you, we tripped on this. So whenever we do a real estate project, whenever we find a resort we're interested in investing in, what we do is we go out and we look for old, dilapidated resort properties that we can basically rebuild the whole thing and add more cottages and add restaurants and add marinas and other amenities that people going on a cottage vacation to a resort would want to have. Nordic spas, everything. And then when we figure out what we want to add to it and what we can add to it that conforms with the land use and the zoning, then we get an appraisal done. We get a very special appraisal done. It's called the hospitality appraisal. Now, in a hospitality appraisal, what makes it different is the appraisal company will look at the real estate and they'll figure out what that's worth. But then they'll look at the business. They'll look at the revenue and figure out what that's worth. Most people don't know that a business like this, for every $100,000 in net operating income there is, it adds $1 million in profit to the business. So it allows us to do something that is really, really special. That's the recycling. Let me explain how it works. We have a resort project in Napanee, Ontario. We're raising a total of $26 million from investors to build this project and get it open and get it running. Now, we got a hospitality appraisal done that said when this resort is open and it's making money, it's going to be worth $55 million. Now, the amazing part about this is, let me just pull up my handy dandy little calculator so you guys can actually see exactly how this works. Stand by for 1 second. I'm going to pull up the calculator here. So we have an appraisal that says this property is worth $55 million, right? We have 3 different banks in Ontario who love to do mortgages on hospitality resorts and projects like this. They have all told us the same thing. They will lend up to 60%. We had them look at our financial perspective, so what we believe we're going to make in money in the future, and they all said, yes, that fits very congruently with what everybody does already. And then they tell us, if you do this, if you get the place built and you're making that type of money, you will easily qualify from a first mortgage on the property up to 60% of the value. So $55 million times 60% equals $33 million. You seeing what I'm telling you here? They said they're willing to give us a mortgage up to $33 million. But we've only borrowed $26 million from people like you. And you invest the money and you buying a piece of the company, so you become an owner. So you know what we do? When we get the mortgage from the bank, we give you back your initial capital. We give you back all the money you put into the project, but we let you keep the stock. Now, this place is expected to do about $15 million a year in revenue with a 50% net operating income. So that means $7 million in profit. As an owner, we have to give you a piece of the profit. And from all of our math and our expectations, that piece of the profit is going to equate to about a 15 to 20% return on the initial money you put in. So if you put $100,000 into the project, and that could be $100,000 in your registered funds, your RESPs, your LIRAs, your TFSA, or even cash, if you put $100,000 in, you're going to make, let's say 15%. That's targeted, right? This is what we believe. 15%. So that's 15 grand a year you're going to make. Now here's the best part. As soon as the place is open and we get that mortgage arranged, we're going to give you your 100 grand back. So now you've gotten your initial capital back. The risk is gone. You can't lose your money. We gave it back to you, but we're going to let you keep the stock. That means you keep getting paid 15 grand a year. Now, right away, the skeptical amongst you are going to say, how are you able to do this? Why aren't you doing this? And if this is so easy, why are you doing it? Why isn't everybody doing it? Let me answer the last question first. The reason everybody's not doing it, it's because the business models they're raising capital for, multifamily real estate, apartment buildings, commercial buildings, all of that stuff, it doesn't have the same net operating income. You can't get the value increase that we can. So we're able to pull this off and nobody else is. Recycling capital is something we will probably only be the only company ever to do. So it really works. Why hasn't anybody else done this before? Because they haven't found it. It's a new innovation. It's something we figured out and it works. And we've tested this against 6 different projects we're doing and it works in every project. So the gist of the story is, because of the way we're raising the capital and because we're selling equity to let you come in, when we finish the project and we get the bank loans, the banks are okay if we use that money to pay you back your initial capital. The last thing I'm going to tell you is, this is something that's even written into the CRA legislation, the regulations. Canada Revenue Agency says that a company like ours is entitled to and allowed to reimburse the initial capital of its investors if it can be done in a way that is not burdensome to the company. If we can do it in a way where we can give everybody back their money and the company stays healthy, we're allowed to do it, and you are allowed to get that money back tax-free because it's a reimbursement of your initial capital. So you can lend us the money, not a loan, you're buying stock. So you're investing the money, you're buying stock in the business. Right after we open it, we refinance it, we give you back that initial capital. That means you get to participate in the dividends even if you haven't gotten your money back. Now, let me ask you a question. Let's say this all works perfectly. You invest your money in one of our projects, the resort opens, you start getting paid dividends, and then about a year after it opens, we refinance the property, we give you back your initial capital, and everything works perfect. Let me ask you a question. If it works perfectly, would you want to do it again? Once I give you that initial capital back, my plan is to come to you and say, listen, Mr. and Mrs. Investor, it worked perfectly. We'd like you to put your money into our next resort project. Now, why would you want to do that? Because you can compound your returns in a way you've never seen before. So if you're making 15% on the first resort off that 100 grand, you take that 100 grand, put it into the next resort, you're making 30%. Then we give it back to you again. You put it into a third resort, you're making 45% per year. Maybe you do a fifth resort, you're making 60% on your money, and you got that initial 100 grand back. Now, here's the best part. In 15 or 20 years from now, we're going to sell the entire company to one of the big hotel chains or one of the real estate investment trusts. And now you own stock in 5 or 6 resorts, and you get to participate in the exit in a way you've never seen before. Friends, that's the story. It's unbelievable. Now listen, I have to tell you, I have to advise you, we can only accept capital from eligible investors or better. So if you're listening to this video and you earn at least $80,000 a year as a T-Ford employee, as a person in Canada, or if you own a business that makes more than that, or between you and your spouse, if you make $300,000 a year, this can be a common law spouse, it can be a same-sex spouse. Between the two of you make $300,000 a year, or if you have $400,000 in assets, you can participate. And if you'd like to learn more, I'm going to put a link in the notes of this video where you can book an appointment to talk to one of our dealer representatives. We have several amazing people work with us that are investment advisors, so they're going to meet with you for free. They're going to tell you more about our projects. They're going to give you some information to review. They're going to make sure that this is something you really feel comfortable doing. If you check all the boxes with them, they'll get you signed up in our company. But listen, even if you'd like to book an appointment just to ask them questions and get some ideas from them, do it. It's a free invitation. It's a free appointment. Click on that link below. It'll take you over to a registration page. You can register to book an appointment. They're going to meet you on Google Meets, so you can actually meet them, ask them questions, get to know them better, and take it from there. Now, when you're filling out your form, I'm going to ask you to use your cell phone number, the number of the phone you have with you all the time, because my dealer representatives are actually going to call you the day before your appointment and get to know you a little bit. Anyway, if I've got you excited about recycling capital and getting involved in our resort projects, I got one more thing to tell you. Every one of our investors, we have a points program. Just like all of the big points program, like the Marriott program or the Aeroplan program. Our points program is called the Dream Trip Club. And when you shop in Canada, you can earn points to the Dream Trip Club. You can go to our resorts and stay at them. You can earn more points. And the top level in our points program is called Ambassador Elite. And the Ambassador Elites get a 10% discount on any stays at any of our hotels and resorts or cottages. If you invest in our projects, we give you lifetime grandfathered Ambassador Elite status, which means a 10% discount staying at any of our resorts. Now, if I've got you intrigued by what you've heard in this video, click on that link, book an appointment with one of our dealer representatives, and let's see where this takes you.